Can I invest in stocks by myself? Hello and welcome to our video on investing in stocks. If you're a beginner who's looking to get started with investing, you've come to the right place. In this video, we'll be discussing everything you need to know to get started with investing in stocks, including the question, can I invest in stocks by myself? How to choose stocks, how to manage your portfolio, and how to stay informed about the market. Before we dive into the details, let's start with the basics. What is a stock? A stock represents ownership in a company. When you buy a stock, you become a shareholder in that company, which means you own a small piece of it. The value of your stock can increase or decrease based on the company's performance and other factors, such as economic conditions and investor sentiment. So, why should you consider investing in stocks? Well, historically, stocks have provided higher returns than other types of investments, such as bonds and savings accounts. Of course, there's no guarantee that your stock will increase in value, and there are always risks involved with investing. Now, let's move on to the first step in investing in stocks: choosing stocks to invest in. This can be a daunting task, especially if you're new to investing, but there are some key things you can look for when evaluating stocks. The first thing to consider is the company's financial health. You'll want to look at the company's financial statements, including its revenue, profits, and debts. You can usually find this information on the company's website or in financial news publications. Another important factor to consider is the company's industry and competitive position. Is the company in a growing industry with high demand, or is it in a declining industry with lots of competition? Are there any barriers to entry that might prevent new competitors from entering the market? You'll also want to consider the company's management team and their track record. Do they have experience in the industry? Have they made smart decisions in the past? Are they transparent and honest with shareholders? Once you've identified some promising stocks to invest in, it's time to build your portfolio. Your portfolio is simply a collection of stocks and other investments that you own. The goal of your portfolio is to achieve a balance between risk and reward, so you'll want to diversify your investments across different industries and asset classes. One common strategy for building a portfolio is to use a mix of stocks, bonds, and other investments, such as mutual funds or exchange-traded funds, ETFs. This can help reduce your risk by spreading your investments across different assets. When building your portfolio, it's also important to have a long-term mindset. Stocks can be volatile in the short term, but over the long term, they tend to provide solid returns. Focus on your long-term goals and stick to your investment strategy. Finally, it's important to stay informed about the market and the companies you're investing in. You can do this by reading financial news and analysis, attending investor conferences and meetings, and monitoring your portfolio regularly. So come back to our question, can I invest in stocks by myself? Yes, it is possible to invest in stocks by yourself. With the rise of online brokerages and investment platforms, individual investors can now buy and sell stocks on their own without the need for a traditional broker. However, investing in stocks requires knowledge, experience, and research. You will need to understand how the stock market works, how to evaluate stocks, and how to manage your portfolio. It's important to have a solid investment strategy and to be prepared to weather the ups and downs of the stock market. If you're new to investing, it's a good idea to educate yourself before diving in. You can start by reading books, taking online courses, and following financial news and analysis. You may also want to consider consulting with a financial advisor or mentor who can guide you and provide personalized advice. Ultimately, investing in stocks can be a rewarding and lucrative endeavor, but it's important to approach it with caution and to always do your due diligence. Two major reasons why investing in stocks can be beneficial for me. Potential for high returns. Historically, stocks have provided higher returns than other types of investments like bonds and savings accounts. While there is no guarantee that your stock investments will generate high returns, the potential for growth can be significant. Over the long term, the stock market has tended to go up, and if you invest in a diverse portfolio of stocks, you may be able to ride out market fluctuations and achieve strong returns. Ownership in companies. When you invest in stocks, you are buying a small ownership stake in a company. This can be an exciting way to participate in the success of a business and potentially benefit from its growth. Additionally, owning stocks can provide a sense of involvement and connection to the companies you invest in, as you can vote on shareholder proposals and attend annual meetings. The steps for investing in stocks. Number 1. Determine your investment goals. Number 2. Educate yourself about the stock market. Number 3. Open a brokerage account. Number 4. Decide on the stocks you want to buy. Number 5. Place your trade. Number 6. Monitor your investments. Thanks for watching this video. We hope you find this video informative and useful. Please do like the video. If you have any questions, feel free to write in the comments section below. Don't forget to subscribe to our channel for more videos like this.